they're still very good businesses. I mean, if you've got a brand, if you look at the return on tangible assets, you know, Coca-Cola or Kraft, Heinz or anything, you've got a very good business. It doesn't look as good as it did 5 or 10 years ago. In other words, there's two reasons, I think, for that. One is people seem to me to be a little more willing to experiment with different diets or foods than they were 5 or 10 years ago.
Some people would say healthy diets, where they won't eat things that are packaged. They think that's bad for them. It's a millennial attitude, too.
Yeah,
they won't buy some of the old brands.
Certainly, that's a factor. I think it may even extend beyond millennials to some degree. People are more, well, they've gotten used to more change in their life generally. And so I would say that there's still a huge loyalty factor, but it is not as strong as it was 5 or 10 or 20 years ago. And secondly, there's always been a struggle between the retailer and the brands. I mean, you can't. I mean, that's built into the American market system. And I would say that the retailers, and they've always had private label brands. In some other countries, private label has been much stronger than in the United States, for example. And the private label brands are priced below the big brands. And the retailer, every time a retailer meets up with a packaged goods salesperson, they're arguing for lower prices and better deals. And I would say that their hand becomes stronger as the Costcos and the Walmarts and in other countries, as they become stronger, the struggle can tilt a little bit one way or the other. I think a few years ago, I think Costco dropped Coca-Cola, and that's a real test if you want to. And of course, Sam's Club at that time started pouring it on with more Coke and everything, and that Coca-Cola's a pretty strong brand, so that Costco could decide to do that. But if Costco decided to drop a bunch of other brands that you could name, or Walmart decided to drop them. I mean, the packaged good company might feel it more than the retailer would feel it, and they would come to terms faster. It's an interesting dynamic, and it's gone somewhat against the packaged good companies. They're still good, very, very good businesses.
Is that dynamic between the retailer and the packaged goods companies, is that a pendulum swing that swings back, or is this a new?
No, and not necessarily. No, I mean, you've got these German discounters coming over here now, and each company's got some muscle. And if you've been selling, whether it's Coca-Cola or whatever food you may have eaten as a kid or something like that, I mean, you want the consumer, because you got to win with the consumer in the end. You've got to have a product that's strong enough that the retailer has to carry it to some degree, and where their private label, even though it's priced below it, does not draw volume away. And if you take Heinz ketchup, it's very, very, very hard to take share away from Heinz ketchup. It's hard to take share away from Philadelphia cream cheese, but I could name some other products where it's easier to take share away. And the consumer votes every day, and some things are affecting the consumer, like the feeling that other things are healthier or something of the sort. Price affects the consumer, but just the prevalence of strength of the retailer can affect the consumer too.
Is that why there's so much pressure for some of these packaged goods companies to get bigger, for new deals to come in? Like, I'm going to take and wrap up with a lot of products, and then I have more heft against the retailers if they try and jerk me around with
you don't
brands.
get if Coca-Cola were to buy, they've got the world's greatest distribution system, so they can push liquids through that. I don't know whether they could push cream of wheat, or something through their distribution system. Obviously, a great distribution system is worth an enormous amount, and like I say, Coca-Cola has a great one. And Coca-Cola, incidentally, they're selling 5% more liquids. They are selling 100 ounces of liquids per capita in the whole world. 7 billion people are drinking a Coca-Cola product, and they're drinking at the rate of 100 ounces a year. That's substantial. Leaves a lot of ounces to go, but they are selling more ounces of liquid. They've got more brands now, but they are selling than they've ever sold. And it grows year by year, and it's growing, and James Quincy is doing a sensational job on that, and first quarter even showed it. But if you've got a brand that's kind of lost out there or something of the sort, it's hard to get shelf space, and the retailer is going to stock what will move, and sometimes that involves price. And what you want to have is a product the retailer has to have.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.